Good afternoon. Welcome to the TheoTRADE afternoon video. I am Blake Young. Today is October 17th, 2024, and we're going to look at retail sales, the broad market, and inflation as we're continuing to see this struggling move higher. Now, when I talk about the struggling move higher, I'm talking specifically about these higher highs, 52-week high on the S&P 500, and yet we've done this last 3 weeks with lighter and lighter volume, lower averages, never reaching average price, except on bearish days. So these breakouts and the gap up, close down, and filling the gap almost perfectly as we go into the final 3 minutes of trading is showing that this is a major struggle to be able to get any traction to move higher. Is that because inflation is hot globally? Is that because we're seeing retail sales move higher and it's not because we're buying more things, we're just paying more for what we're buying? Looking at retail sales today, you can see it came in hotter than expected, 0.4%. But it's important to note that retail sales does not adjust for inflation. It is just a total dollar amount. And if you take out the fact that oil prices pulled back and you look at core retail sales, it's even hotter. And looking at today's moves, you can see there's plenty of red, plenty of green, a very mixed market. And if retail sales were really hot and we'd expect a lot of growth, you should expect to see more in consumer discretionary going higher. It's primarily red. It is McDonald's is in the green, Amazon is in the green, but a lot of red here, a lot of red in the consumer staples. So the retail traders or the retail companies didn't do that great today. So this number wasn't that encouraging overall. Now there are two things I'm going to use to determine what inflation is and whether inflation is hot or not. And that number one is that the price ratio between gold and bonds. And as you can see, gold and bonds are at a new high today. So as we're pushing up to these highs and failing to break out, inflation is still hot. Gold is rising in bond terms faster and faster and faster. And this is a record high in that gold versus bond. So we know we're hedging out inflation with gold prices. And you can see that in the gold futures or GLD. And even seeing that push into the metals miners. And there's gold putting a new 52-week high in today. And it's no surprise to see equities try for a 52-week high at the same time as gold because they're both denominated in US dollars. What is surprising, which I'll discuss more in the morning on our live call, is that the dollar has had its strongest 2-3 week run in decades. This is the massive, super aggressive climb. If you look at this from a week-to-week perspective and look at those size of the candles there, these are the largest individual candles with follow-through than we've had in decades. And even back through here, it's not nearly the same kind of size when in conjunction with the move and the recovery. And we went from 99 all the way up to 103 so far. And this has the potential to easily get up to 105 or higher. So how is it that we have a stronger dollar while we have gold prices higher? It is because the dollar is quoting the dollar against all these other currencies. So the dollar getting stronger against other currencies and losing to gold means that the dollar is stronger than other currencies, and gold is stronger than the dollar. That means that gold is stronger than all other major currencies combined. As we're looking at those, we're seeing gold as the defensive play for inflation. So I am definitely looking at inflationary plays. At the same time, we have significant inflation. Our costs are stretching consumers. So we have consumers being stretched, and in China, we have deflationary pressures. So I'm looking at deflationary pressures while the globe is looking at inflationary pressures, which is setting me up for the next leg down in things like FXI, EWJ, EEM, so the emerging markets, and pretty much all of Asia. Like we'll set those trades up in the morning in more detail. But this is definitely supporting that idea that we're going to continue to see some strength in inflation, gold prices, and the US dollar, and therefore the dollar is likely to continue to gain versus other currencies. But China is facing disinflation or deflationary pressures internally, which makes it harder to manufacture and harder to export. As we're looking at these, we have a couple other setups that interest me kind of outside of inflationary pressures. Zoom is one that kind of interests me from the idea that it doesn't seem to have any correlation to inflationary pressures at all. It falls when inflation is rising. It rises when inflation is rising. It falls when it's going flat. So I don't see a real high correlation with Zoom and inflation pressures, and this gives me an opportunity to trade it purely from a technical basis. As we're looking at this, I see consolidation in what I would consider a wedge or a triangle, and since this side is falling, and the other side is rising, I'd call it a triangle. And this triangle pattern on Zoom is setting up for a move from about 65 to 71. Today's bounce and gap up, close higher, showing there's strength to it. We could have entered back here yesterday, but we're looking for that breakout to give us a target of about $6 to $7. I'm looking for a 10% from the breakout, and I actually like the close today. So on the open tomorrow, end of day today, if you could have got in, but open tomorrow, if we're opening higher, if we're showing that there's more strength in here, we could see a 10% move, and we could be heading to new 52-week highs in Zoom. In conjunction with retail sales and the fact that it's inflationary and not actually demand related, Target rolled over and gave us a really nice opportunity to go short. I expect Target to fall from 160 back down to 150, potentially a little bit lower to 147. I'd be looking for that retest, which means we have about $8 more in the move, and we're talking about just over a 5% correction to find support. And that's kind of what we're seeing in retail in general. I would also be looking in the retail space to fade or short or go bearish into Best Buy. It did not close below the close or trade below the lower shadows, but it certainly dropped back down to support any movement below today's low. Or if you want a little extra confirmation, let's get below 95.20. This sets up for a confirmed double top. And if we're going from 103 down, or 103.50 down to 94.50, now we're talking about another $9 move, and a $9 move would take you into this 85 range, or that gap from prior earnings. And if we fall back to 88, 89, you have the potential to make 10 to 12% on simply a bearish move, let alone a long put or a short call vertical with today's move. Huge candle, big bearish move on good volume, and I'm looking for that to get all the way down to 88. And one more that I'm looking at that I'm struggling with as far as the earnings coming up, whether we want to try to ride this into earnings. I think we can get away with it. I think that we've seen some real misses in previous earnings, but today's engulfing candle, a very wide committed bearish candle, has pushed through that last low and through the last close. That means this is the lowest close that we've had going all the way back through August, except for this. So I'm looking for a drop down to 36. That's about a 10% move just to retest previous support and consolidation areas. And we likely can hit that without having to get to earnings and having an earnings surprise push it through that level. So I'm looking at Roblox as an opportunity to fade, to trade lower, to have it hit that target, to gain about 10% on the way down here. It is important to note as well that the implied volatility is at 66%, so the short call vertical above 42.50 may be the better strategy to collect premium, and then you don't have to have it go lower, you just have to have it not clear today's high or all that consolidation high. And it looks fairly promising as far as the probabilities go. And to go full circle back to retail sales and this inflation discussion, I do think there's more opportunity in fading retail. Retail sales are up here near the highs. You can see it's holding at this previous resistance, and you see it's not breaking through. So even though we have one of the best reports we had in retail sales, a surprise increase, we haven't been able to break through these highs at 79 since March. We've tested it, gapped up, closed down. So even on the breakouts, we reverse right back in. And if we were to quote retail sales in gold terms, so if you want to see how much is being hedged out for inflation, this would give you an indication of how retail sales are doing when it really comes to inflationary pressures. It's gone from here down to here. Now I just want you to look at the trend specifically. The trend is what is giving you that idea that we've gone through this move and seen about a 70% drop. And specifically, we can go back for the year and say gold has gone from 177 to 249, increasing in value or hedging out 40%. A 40% increase or 40% hedge against inflation in gold as it's climbed versus the gains that XRT has had in the last year, going from the low to the open to the close today, has gained about 31%. So we're talking about 10%, but gold is leveraged up. So we're actually down 10% when adjusted for inflation. When we do the leverage behind gold, that's why it makes it look like 70%. It's about a 7 times ratio. But as we're looking at it again, gold's up 40, retail's only up 30. That means retail in gold terms is down. And we are not seeing that rally. So outperforming is outperforming purely based off of higher prices, not based off of actual higher amount of purchasing or demand. which means I will still be looking to short retail. I will be looking to short consumer discretionary type stocks, looking to bet on staples, looking against the emerging markets and the Asian markets, and in conjunction with higher gold, stronger dollars, and weaker other global currencies. That's going to do it for me today. Join me in the morning with Brandon as we discuss this further, as we see inflation running hot and growth slowing down. Could be stagflation.